Hey guys, welcome back to my YouTube channel. So today's video is based on the difference between trading and investing. And I need to raise this concern because I think there is a problem with retail investors not understanding accurately what the difference is. And it's important to understand it because you might have characteristics that a trader has. So if you're doing investing but you're a trader, you might not be doing as well as you could, and vice versa. Now I'll get into a bit more detail because at the moment you might not be understanding what I'm saying exactly, but just to sort of as an overview, the way I see it is if you hold a position over 6 months, you're investing in that position, and under 6 months you're trading. So anything from a minute to 6 months is a trade, but above 6 months it becomes an investment. And the reason being is because traders do not go 1 or max 2 quarters in advance. They do not get positions more than 1 or 2 quarters in advance because they are reacting based on a specific news or specific earnings or the macro condition at that point or whatever it may be. So they do not get positions now what they might think in the year later. In some cases, yes, they do, but in general, just sort of giving you an idea of what a trader really is, and that's what a trader does, is more shorter time horizon. But short term doesn't just mean by the minute, by the seconds, because now times have changed. You can't, you have to end up holding positions a bit longer usually for them to work out, because there's so much liquidity in the market. So times have now changed. But as an overview, I think if you stick to that criteria, you kind of understand that above 6 months is an investment. Under that is trading. Now, the reason why I make this video is because a lot of people, when I make some calls, end up asking or getting annoyed and saying, oh, because this stock X, Y, and Z is going to be a long-term great hold. And yeah, they're right. They're not wrong. In some cases, I'm shorting a stock that long-term I think would be a great hold, but I'm trading, so that doesn't bother me. So a great example would be, because I made a video on this quite recently actually, and obviously the call worked out really well, was the short on Boohoo. So I got in about, I don't know, 190ish, I think. Where's 190? 190ish, just before earnings, and then obviously we went all the way down to about 176. So what was that as a percentage anyway? Let's see. So about 190. Yeah, so about 10. If you go to the bottom, about, let's say about 10% gain. So I was short this obviously just before the earnings and obviously made a decent return on it. Now, again, long-term horizon, yeah, this company potentially, I'm not making any claims on it, but yeah, it could be a great long-term hold, but that didn't bother me. I knew, as I mentioned in the video about this, that the retail sector, even the online retail sector, was having issues with regards to discounting and pricing and so on. So the sentiment around these companies was definitely on the downside. Now, when ASOS reported, that's when obviously Boohoo had declines from here to about 150. And then the great thing is that it actually appreciated quite well before earnings. Now, when you get scenarios like that, the problem is even if the earnings is quite good, you're not always going to get a massive jump on the upside. In some cases you will, but in some cases, most cases you probably wouldn't, because if it's had a good rally before coming into earnings, it's sort of pricing in half-heartedly, if not 3/4 of the way, that we think, or the market thinks, that the report is going to be good. And like with their case, the report was fairly good. But again, like I said, because the market was already up before the earnings, they were expecting something, blowout numbers and everything, with really, really good strong-term guidance. And they had great numbers. Guidance-wise, they did actually say some decent optimism news, but it wasn't enough to hold up the market, and that's why we had a 10% decline. So as a trader, that would be a great opportunity. Look, you're in 190, you get out 170, 180, whatever. Made 10% gain, that's it. You're off the position. Now you might revisit this stock again later, and that could be dependent on a number of things. But for now, at the moment, obviously, I do not bother touching a stock that just got out of, unless it really gets to a price that I really, really like. But yeah, so that's just the way it is. And the reason why I also want to make this difference, because right now, in my opinion, it is a really different market. I think everyone's enjoyed passive investing and doing long-term investments over the last decade, but now that time has now gone, in my opinion. You have to be looking at the trading and the market environment that we are in now. And as I mentioned in the previous video, I am short the market. So with that bias that I have, in my opinion, if the market has a potential downside, it means it has more volatility. If it has more volatility, that means trading environment is going to be great. But investing environment, not really, because you might get 10% upside on a stock and then 10% decline on a stock in a space of 2 weeks. So as a trader, you make a killing, but as an investor, you pretty much be flat at the end of the 2 weeks. Not to say you cannot still invest. You still find these companies that do end up declining, and if you like the value of them and you think long-term valuation is great, you could be investing. But as a trader, this is probably the best environment coming up for us. And anyone that's out there watching this video that is trading, leave comments. Let me know. It'll be great to chat to other traders, what they're thinking and how they're playing the markets. Because I personally am loving, this period that we're having, because it's allowing a lot more opportunities and allowing you to get in and out of positions a lot faster, and obviously so that way you could churn your money. And again, not always do you make money, but the point is, because the environment is suited to you, if you are a trader, you will have opportunities to make money. Now the best traders do lose 50% of the time, so your job is to just minimize the losses by percentage I'm talking about in each trade, rather than on the number of positions you lose, because you will lose positions still. But anyway, yeah, so it's a great market, and all the traders out there, I hope you have a good trading environment, because it definitely will be a fun time. For the investors out there, you could be picking up some nice cheap valuations on companies that you've been thinking about for a long time. And yeah, so I thought I'd just make this little video about that, and I hope to see you guys in the next video. Bye.